In business, just like in sports, you absolutely need a scoreboard to know if you're winning. Well, that scoreboard is performance reporting. It's how companies track their progress, make smarter decisions, and, ultimately hit their goals. So let's dive right in.
I mean, this is the big question, right? It's what every manager deals with. You can have the most brilliant strategy in the world, but if you don't have a way to measure how you're doing against that plan, you are pretty much flying blind. Performance reports, well, there's the instruments that light up the cockpit, showing you exactly where you are and where you're headed.
So here's our roadmap. We're going to start inside the company, taking a look at the internal dashboard. Then we'll zoom out to see how companies report to the rest of the world. After that, we'll get into a really powerful new definition of value. And finally, we'll pull it all together and see how this stuff actually works in practice.
Okay, let's kick things off with the tools for day-to-day navigation. Just think of these internal reports like the dashboard in your car, or maybe a doctor checking your vital signs. They give you that instant feedback you need to stay on course, maybe adjust your speed, and just make sure the whole engine is running smoothly.
So here it is, the manager's essential toolkit all in one place. A status report is basically your "you are here" map. A progress report, well, that shows you how far you've come. Now the variance report, this one's your crucial reality check, because it compares your plan to what actually went down. Trend reports help you spot patterns over time. Forecasting helps you look around the corner. And the earned value report, it pulls everything together to answer that one massive question. Are we really getting the value we paid for?
All right, so that's the internal view. But of course, companies don't operate in a bubble, right? They also have to report their performance to investors, regulators, and the public. And this external reporting is all about accountability, transparency, and ultimately building trust.
For decades, external reporting was really just about the financials. But today, stakeholders are demanding a much, much bigger picture. And that has led to the rise of these powerful frameworks like the Triple Bottom Line, the Global Reporting Initiative, ESG reporting, and the big one, integrated reporting. Each one kind of builds on the last to tell a more complete story.
This slide just nails the shift perfectly. Traditional accounting was one-dimensional. Profit, that was it. The Triple Bottom Line, or TBL, came along and added two more critical dimensions: planet and people. It forces a company to ask not just, hey, did we make money, but also, what was our impact on the environment and how did we affect our community?
And the key takeaway here is that TBL forces a more sustainable way of thinking. By focusing on those three Ps, profit, planet, and people, it pushes organizations toward long-term value, not just short-term gains. Oh, and for those of you studying for exams, mentioning the three Ps and the shift towards sustainability, that is absolutely key to scoring well on this topic.
Now, if TBL is the big concept, you can think of the Global Reporting Initiative, or GRI, as the global rulebook. It provides a standardized set of guidelines, a kind of common language, so that a sustainability report from a company in Brazil can be accurately and fairly compared to one from Germany. It creates that essential consistency we need.
ESG reporting is really similar, but it's got a laser focus on what investors need to know. It's all about providing clear, hard data on a company's environmental, social, and governance performance. This helps investors see risks and opportunities, things like supply chain issues or brand reputation, that a traditional financial statement would totally miss.
And all of that brings us to the most strategic framework of them all: integrated reporting. This is where everything really comes together. It takes financial performance, sustainability, and governance, and it weaves them into one single, cohesive story about how an organization truly creates value, not just now, but in the future, too.
This definition is everything. An integrated report isn't just a data dump. It's a narrative. It's about connecting the dots. It explains how a company's strategy, its leadership, and its performance all work together to build real, lasting value across the entire business.
And here it is, the big aha moment. Seriously, to get integrated reporting, you have to understand that value comes from so much more than just money. The entire framework is built on this breakthrough idea called the 6 capitals.
This is the secret sauce right here. So you have financial capital, that's the money, obviously. But then there's manufactured capital, your buildings, your equipment. Intellectual capital, your patents and internal know-how. Human capital, the amazing skills and experience of your team. Social and relationship capital, that's your brand, your reputation. And finally, natural capital, the air, the water, the resources you rely on. A truly successful company today doesn't just grow its bank account, it grows value across all 6 of these capitals.
Okay, I know, that was a lot of theory. So how does this all connect in the real world?
Let's trace it through a really practical scenario to see the cause and effect in action.
Let's break this down like a case study. Step 1, an investment. The engineering department brings in some automation. That's an increase in its manufactured capital. Step 2, the impact. This reduces man-hours and lowers costs, which directly affects financial capital. Step 3, measurement. And this is where our internal dashboard comes right back into play. A variance report calculates the difference between the planned cost and the actual lower cost. And Step 4, action. Management sees that positive variance. The critical comment you'd make here is that the investment in technology is generating a clear, measurable financial return. See? It's a perfect feedback loop connecting investment, operations, and reporting.
So, this brings us to the final and I think most crucial question. As the whole definition of success keeps expanding way beyond just profit, every leader, every investor has to be asking, which of these 6 capitals, financial, manufactured, intellectual, human, social, or natural, which one will be the true engine of lasting value in the years to come?